Welcome back to Worldwide Exchange. In this post-financial crisis world, companies are setting a higher priority on improving risk management inside and out. The Institute of Internal Auditors helps with that campaign. It's a global standard-setting body serving more than 170,000 members in 165 countries. That's why he's on Worldwide Exchange. Richard Chambers is the president and CEO of the Institute for Internal Auditors. He joins us live this morning. Thank you so much for your time, sir. We appreciate it.
Thank you.
So how far are we from the days of the WorldCom and the days of the Enron? Have we gotten to a point where we're in the clear?
Well, you know, I think it's been a remarkable decade in some ways. The internal auditors were actually the ones who blew the whistle at WorldCom. I think that helped them really gain the kind of stature that they enjoy in a lot of companies today, moved from the back room into the boardroom in a lot of companies. In about 90% of the cases now, internal audit has at least a reporting relationship to the audit committee.
What about the idea that this transparency, which we all want much more of, I think we can agree on that, can actually cut the other way? There could be too much information, some reports coming out and saying it's great that Goldman is lifting the veil and we're getting to see all of the internal workings there, but we don't know exactly how to process that, and that could pose another risk in and of itself.
That's a good point, Nicole. Actually, I think it starts with trust. If investors trust the board that they put in place to help oversee the company, and then the board selects management that they trust, I think you can have some confidence if you're an investor that the information you're getting is accurate. I think what it really comes down to is being able to identify, though, as an investor, what is it that you're judging the company on the basis of? Is it just the bottom line, or are you looking forward at how the company's managing risks in the future?
Well, how about you tell us, because you know those pressure points better than anybody else. What should investors be asking in terms of the board and whatnot? Well,
I think the investors need to be sure that the board has its eye on risks. I think this latest crisis shows what happens if a board doesn't or boards don't understand the risks, if management's out there taking on risks or not being transparent. And so I think the investor can be more confident if they know that the board has its eye on risk, is setting the risk appetite of the company, and then they can also have some comfort if there's a good, strong internal audit function there supporting the board and giving them the assurance that those risks are being accurately
Well, what's
managed.
the difference between an internal audit system or an external audit system?
Well, the external auditors are providing assurance to investors and others that the financial statements are accurate, but the internal auditors are providing assurance to the board and to management that the internal controls and risk management and corporate governance are working correctly.
And this is a time where we're seeing a lot of executive compensation, of course. What would you ask specifically there for investors in terms of risk management based on short-term profits or based on something more substantial?
Well, I think the investors need to ensure, or actually the board needs to ensure that it's put together a compensation package that weighs risks, because it's easy if all you're looking at and all you're judging management on is what the bottom line is this year. It's easy to lose sight of the fact that you may be taking real risks to achieve some results in the current year. So I think there has to be a linkage between executive compensation and risk management, and you have to make sure that the board is overseeing that.
All right, very good. And you're the man that's doing just that?
Well,
I take it?
Yeah.
Okay. Good to have you with us, Richard Chambers. Thank you so much for your time, President and CEO of the Institute for Internal Auditors. Becky.
Well, UK growth contracted unexpectedly in the fourth quarter. GDP for the period fell by 0.5% compared to the third quarter, and that was very much in contrast to the Reuters consensus for an expansion of 0.5%. Now, let's leave that issue aside for a moment and just get a final thought from Julian Pendock, partner at Stenhouse Capital, who's been with us for the past hour. Julian, whereabouts in these markets can investors find value still?
I'd say selectively. I mean, there's a mantra, people keep saying these markets are cheap. They're not cheap. If you have